This is 15-Minute Fundamentals, where we interview core contributors within crypto and gain insights into their day-to-day operations. In this episode, I'm joined by Murloc, co-founder of Trader Joe, a one-stop shop for decentralized trading on Avalanche, Arbitrum, and the BNB Chain. To cover the basics, decentralized exchanges are smart contract-based exchanges that allow for the permissionless trading of assets globally. The problem that exchanges solve is that it's difficult to get initial liquidity for assets. The liquidity is often geographically siloed, and the transparency of trades is enforced primarily through regulation instead of technology. DEXs bring down the cost of an IPO to one function call. Once an asset is represented as a token on-chain, it can be traded freely on a DEX, and it inherits the advantageous features of the underlying blockchains: global liquidity, predefined rules of operation, immutable audit trail, and open source transparency. The DEX market was initially dominated by order book-based solutions, most of which suffered from low liquidity. Automated market makers that pooled liquidity emerged to solve the liquidity bootstrapping problem and have since gone on to facilitating billions in daily trading volume. The primary business model for DEX is to generate revenue by taking a cut of the trading fees paid by traders. That is, the DEX takes a portion of the liquidity provider's revenue. In this episode with Murloc, we discuss what Trader Joe is and what makes it unique, how their exchange works under the hood, we assess the market opportunity in Trader Joe's position within the space, we discuss current growth drivers, the team behind the project, the Joe token, plans for the future, and more. Hello, Murloc. Welcome to 15-Minute Fundamentals. It's great to have you on.
Hey, thank you for having me.
Awesome. Today we're going to be diving into the details behind Trader Joe, but just before we get into those, could you give a quick introduction to the protocol for anyone not yet familiar?
Sure. So we are Trader Joe. We are everyone's favorite decentralized exchange, or DEX. We invented Liquidity Book, which is the most capital efficient AMM, or automated market maker, in all of DeFi today. Liquidity Book has lots of novel features. It was designed for liquidity provider sustainability while giving traders the best prices. Our journey started in mid-2021 on the Avalanche blockchain, where we quickly grew to a top 5 DEX in all of DeFi by building a great community and user-friendly platform. Since then, we've served over 80 billion in GMV. We've built a one-stop shop for DeFi and Web3 with DeFi yield farming, money market lending, and token launchpad. Last year, we also launched JoePegs, an NFT marketplace. And today, we're live on Avalanche, Arbitrum, and the BNB Smart Chain. Who are we as people? We're a team of builders. We aim to build great products, and we love to engage and educate our community.
That's great. Thank you. And as everyone loves you, like you well said there, let's dive into the why behind that. So if you could just break down the core problem that Trader Joe set out to solve. So what is the purpose of your existence?
So we would like to think of it as, 3 goals, 3 pillars. First is best prices. Second is sustainability. And third is DeFi for everyone. So the first pillar, best prices, here, like I mentioned that we invented an AMM protocol called a Liquidity Book. It is the most capital efficient AMM. It allows traders to swap tokens at zero or low slippage. And this is important because past generation DEXs relied on building a very large captive amount of liquidity just to provide an efficient price. And Liquidity Book, we can turn over, serve a large amount of traders with the least amount of liquidity. And that helps us to provide the best prices. Sustainability. So Uniswap v3, which is, the largest decentralized exchange protocol in the industry today, it's been released for 2 years, and we're still not sure that liquidity providers can be profitable or even sustainable. And Liquidity Book improves upon this with surge pricing. So traders pay extra dynamic fee during high market volatility. We just think this makes sense for everyone. We think of decentralized exchanges as a two-sided marketplace, and this improves sustainability for the liquidity providers on our platform. And the third is DeFi for everyone. So we love DeFi. It is empowering, but it can also have a steep learning curve. We foster a cozy community so that everyone, from beginners to experienced participants, can learn new things every day. DeFi is all about discovering new things. It also gets harder with newer mechanism and newer strategies. So for example, Liquidity Book is extremely powerful, but can also be difficult to learn. And so that's why we also build new products on top of that. For example, a new feature that we're launching soon called auto pools to automate a lot of the liquidity management so users can one-click participate. So DeFi for everyone for us is both education and community fostering, and as well as building products that appeal to everyone to be able to participate.
I love that. Educating the community and lowering the barriers to participate in DeFi will unlock so much potential that this space has yet to unleash. So that's great. Now, you really well described Liquidity Book and the features and benefits that it has introduced to the market. If we speak a bit more about your core product suite and what you're building on top of that, it would be great to hear about your core products and their features in a bit more detail.
So the first is swapping tokens, right? So traders can swap tokens on our exchange, just like many other decentralized exchanges in the industry. But for us, traders can swap tokens, for example, Ethereum for ETH for Arbitrum, ARB token, and they can enjoy the best price. Users in DeFi sometimes notice that there's a small price difference when they swap, and this is called slippage. It gets bigger when you're trying to do a larger amount of tokens to swap. Now, with Liquidity Book, if there's sufficient liquidity in the pool, it's possible that there's almost no slippage at all. And so, that's how we offer best prices for swaps. For the other side is pools. So the pool feature allows liquidity providers to come to our platform, deposit their tokens into pools for traders to swap against, and they can earn fees. So users can find different pools that match their tokens. Some pools have higher volatility than others. So users can use our analytics to do some research, which ones have a lot of participation, which ones are efficient or inefficient, and they can choose the price range that they want to provide their liquidity in. So that way, they would only earn fees if the market trades in this price range. So there's a lot of strategy and tooling here to allow them to really optimize, their liquidity strategy and maximize their returns. Users can even choose the shape of their liquidity. So this is something that's pretty cool. This feature distributes their liquidity across different price ranges, and this is the more advanced part of Liquidity Book. And to help people, we have detailed help center articles to teach people how this works. And on top of that, we also have maker rewards. So, market maker rewards or trading rewards for the top liquidity providers to earn additional tokens. So for folks that are really doing a really good job in specific pools, they can earn additional rewards on top. The next is our new product that's coming out soon called Auto Pools. So Liquidity Book, like I mentioned, very powerful, difficult to master, and can be very time consuming to manage. Auto Pools is a one-click solution to automate the liquidity management. The idea is to make it easier for folks to participate, lower the barrier of entry.
That all sounds great. And then just quickly, I want to understand how you choose the ecosystems that you build in. As you're now live on Avalanche, Arbitrum, and the BNB chain, what is the decision-making process? So how do you pick where you launch your product suite next?
Firstly, Avalanche. Avalanche is our home. It's very comfy. It's cheap, fast, stable. Things just work. It is a great place to start for any Web3 developers. And, we chose it because, back in the day because, we love the vibes, right? Back then, it was a community where everybody knew, all the builders, all the developers, all knew everyone. Actually, that's still true today. It's very close-knit. Things work. That's the most important thing for developers. And I think Avalanche provides really great infrastructure for developers. Arbitrum. So we launched our DEX on Arbitrum in December 2022. Arbitrum is the leading layer 2 scaling solution for Ethereum. The future of Arbitrum is very promising. We're happy to be building there as one of the leading DEXs. And for us, we just see Arbitrum as where a lot of folks that enjoy Ethereum and some of the decentralization ethos of Ethereum, that's where folks are trending towards doing all of their DeFi activities. And so, that's how we chose Arbitrum. BNB Chain, on the other hand, is very different. So BNB Chain is very vibrant, very high user activity ecosystem. They love gaming and GameFi over there. So we deployed JPEGs, the NFT marketplace, in January 2023. We chose BNB Chain because we feel like we can serve that community, the BNB community, with our full DeFi plus NFT, one-stop platform. It's a very different kind of value proposition compared to, let's say, Arbitrum, which is it also has a very vibrant gaming community as well. But I think with BNB, it's a slightly different kind of vibe where people want this more seamlessness between DeFi and NFT, and we feel like we're the best platform to provide that.
Got it. That makes sense. Thank you. Now, if we look at the broader market for a bit, as you're building a one-stop shop for DeFi, how do you think about the market in general, and what do you see as your position within it? So are there any specific players that you're benchmarking against? And if you had to like pick one unique selling proposition, what would that be?
I can't just pick one. Like I mentioned, we have three pillars, and that's important because as an exchange, we serve many users, right? We're a two-sided marketplace, and so we have different users that choose our platform for different reasons. Our three pillars being best prices, sustainability, and accessible DeFi for everyone, right? So those are our unique selling points. If you are a trader, we provide the best prices for the liquidity you're looking to swap on chain. If you like to do yield farming and you're a liquidity provider looking for yield, we have the most sustainable yield. Like there's no magic, no tricks here. This is just fees and DEX liquidity being very efficient. And accessible DeFi, I think it just applies to everyone. Like we want this to be a low barrier of entry for everyone to participate. So it's not just for folks who are very large whales with lots of liquidity, like folks that are just trying it out for the first time using a smaller budget, like can participate. So where's our position in it? Well, Liquidity Book is the most capital efficient AMM. And with auto pools, we think we can even make the cutting edge of DeFi easier and accessible. We also have a great brand and community. We have some of the best memes in DeFi, I think. And so when we think about benchmarking, we don't really compare ourselves too much to, other competition. But when it comes to DEXs, I think obviously we try to measure our progress towards the greater decentralized exchange market share. So, some prominent folks, for example, on Arbitrum is obviously Uniswap, but also a lot of other local DEXs like Camelot, Zyber Swap. I think Sushi Swap and Balancer, they're also in the picture as well. So lots of different competitors on the DEX space. But when it comes to branded memes, like I think we have no rival.
Yeah, the branding and memes are surprisingly important, especially the memes in the crypto space. So that's great. Are you able to shed light on how you're internally thinking about like the market size or potential for what you're building?
I think everybody that participates in crypto and DeFi obviously believe that we believe in it. Like we believe that it can only grow bigger. Do we have some kind of specific number? Like no, I don't really think about that at all. I just think that it's quite big and it can only grow bigger. I don't have particular beliefs about monetary systems and so on. Like I personally just enjoy crypto and DeFi. I remember my first magic moment when I first got into DeFi. Like the first time that I tried it, like I was very skeptical for a very long time. Like it sounded so scammy, right? But when I tried DeFi for the first time, I remember trying like the first yield farm or something, and then it just clicked for me. Like the first time I provided liquidity into a DEX, and I could see that I was earning fees in real time. And I can earn rewards. I just think that it clicked for me. And I think the market size potential, like there are much larger audiences out there that are waiting to, explore this and try for the first time. In terms of our own product, DEXs are very much a core staple of DeFi. And so for us, we just want to be, the best DEX, build the best product and go from there. We want to be number one. Like that's the way we think about our goal.
Definitely. And when you think of that goal of being number one, I mean, I think you're moving towards that with good momentum because at the moment you seem to be one of the fastest growing DEXs in this space since launching Liquidity Book, at least. And I just wanted to ask that, what are the current main drivers behind that pace of growth that you have?
So we first launched Liquidity Book in November last year. We started on Avalanche. And even then, we were already the largest DEX by market share on Avalanche itself. And so the question was whether the version 2 of it could outpace version 1. And the answer is yes, very quickly. Like today, about half of our liquidity is on version 1 versus, the other half on version 2, which is powered by Liquidity Book. And the, Liquidity Book does 20 to 30 times more volume. I have to check the exact number, but it's something like that kind of scale. So that growth was also quite surprising to us. Like we knew that it was going to be helpful, but we didn't know how quickly it could happen, right? And whether it would disrupt our own ecosystem. Today, our version 2 of the DEX, Liquidity Book, on Avalanche does about 80% of the DEX market share on Avalanche. And so when we went to Arbitrum, there was a different kind of challenge when we thought about growth. Folks on a new chain, on a new ecosystem may not know who we are, right? And maybe folks who have tried Avalanche know us, but guys on Arbitrum may not know. And even folks that might have tried us on Avalanche before, they might not know that we're also live on Arbitrum. And so the growth for us became like two things, right? One was like, hey, we have a great product. How do we make it work? Right? How do we attract liquidity? How do we attract traders and liquidity providers and so on? And then the other part was about awareness. Like, how do we let people know that we have this great product and that they can use it here on Arbitrum? There's no clever secret for growth here. First is you can't swim against the tide, right? So for us, we felt like Arbitrum was doing something magical. There was a lot of developer activity, a lot of interest. It was a good chain and it was, working quite well, scalably. So we felt like the entire space of Arbitrum was going to grow manyfold. So that was number one, like just be part of a rocket ship. The second was just understanding that the large event that was eventually going to happen, everybody speculated on it, was the Arbitrum token airdrop. And we felt like, hey, if a large token was suddenly airdropped, what are people going to do with it, right? And how would it be traded on a DEX? And so we kind of prepared ourselves for that day to come, knowing that firstly, like we have to have enough selection as a DEX. Like people like to trade certain tokens and names they come to Arbitrum to explore the local tokens, right? Local projects, the local experience. So, we made sure that people can be able to buy and sell Magic or Radiant or GNS, GMX. There's a whole bunch of other names as well. We made sure that people had selection on our decks, so that when they opened the Arbitrum page for Trader Joe, they can find all the cool Arbitrum tokens that their friends have been talking about. And then, being prepared like for the Arbitrum airdrop itself. So this was also many months in the making. We knew that firstly, we had to make sure that some of the more experienced liquidity providers on our platform, they had to be interested in spending their time and energy on Arbitrum. So we launched market maker rewards to try to get people to be active on the Arbitrum markets. And then next, to foster that community, like people have to be good at using Liquidity Book. They have to be enough market makers. So, we cultivated the folks in our Discord. We do lots of AMAs and discussions. We encourage folks to share strategies and learnings to, how to share tips with each other, so that when the day actually arrived that, there was lots of tokens that being airdropped and folks were looking for places to trade the Arbitrum token, our community were the best, market makers. With the amount of volume traded on our platform for Arbitrum on the first day of the airdrop versus the amount of liquidity, like we were miles ahead of everyone else, right? Obviously, there was a lot of liquidity and volume traded on Uniswap simply by definition, they had the large amount of liquidity. That's where you're going to find most Arbitrum token to buy. But other than that, in terms of efficiency, I think it just turned everybody's heads hey, Trader Joe, how did they get so good at providing, for one of the now the largest token on Arbitrum, which is the Arbitrum token itself, how did this happen? And this is just all the homework that we did in the months ahead for that one moment, because we knew when that happened, when the airdrop finally happened, people are going to want to trade that token. They're going to buy it, they're going to sell it. And so made sure that our community was ready, make sure that our market makers were sufficiently educated and experienced to use the product. And of course, making sure that the product worked. It's a bit long story, but I hope I painted a good picture.
I think you did. And that's really insightful context to what you have been thinking. And I think what you said there as well, that there's been no secret recipe to the growth, except that you've been in the right place at the right time. You really had a strategic long-term mindset into where you want to be and how you're going to capitalize or leverage market events. So that's going great. But then on the other hand, product market fit isn't rocket science. So when you provide a good product to the market, it's going to start gaining momentum when people realize that it works. So it's great to hear that you seem to have found a really clear product market fit in the space. Now, as there are many AMMs, and I think many people struggle to kind of understand the core differences, I would love to hear a slightly more technical description of Liquidity Book to the extent that you feel is relevant to share here. Are you able to walk us through the most relevant, important smart contracts and what they do?
Actually, there aren't that many smart contracts for DEX. DEX smart contracts, they define the actual markets themselves. So for example, Arbitrum ETH, right? How to price between one token versus the other, how to swap from one token to the other. And then the other part is, the actual bins itself. What is a bin, which I'll get into in a second. And then lastly is the router. So as folks are trying to trade from token X to token Y, how do we find the best pools to route the trade, right? It might go from token A to token B to token C. So first, like the concept, some folks that are developers or have been in the DeFi space might understand like how classic DEXs today work, like the classic AMMs work. There's this mathematical formula and, things are priced along this curve programmatically. Now, a liquidity book operates a little bit differently. Here, we have this concept of bins. So liquidity is placed into discrete bins, and each bin has a fixed price. So let's use the Arbitrum token, for example. You can have a bin that's at $1, another bin that's at $1.01, and then another one at 1.02, 1.03, and so on. And liquidity is placed separately into these different bins, and users can swap the tokens, let's say between Arbitrum and USD Circle, within these bins. And if you're inside this bin, the price of Arbitrum and USDC is fixed. And that's how we achieve like price efficiency. So long as the price stays within that bin, the traders can swap tokens within the bin at constant price without slippage. So what's so cool about bins? Well, your bins and my bins can stack together. So we all have liquidity in the bins of $1 and $1.01, 1.02, and so on. The bins are stacked together. Just think of it like vertically. And that's how like the liquidity becomes deep. And then liquidity providers can then even express advanced strategy with different liquidity bin distributions. So if we think of some bins along the x-axis, like the price, so $1, 1.01, 1.02, 1.03, and so on, we can put different amounts into each bin. So, we can all put the same amount. So it's a uniform bin distribution. So all of them have 10 USD circled, $10 in them, okay? Or we can do it in a curve. Like we think that, hey, it's going to stay within this particular price range and has a standard deviation of something else. We can have a Gaussian curve, along the different price range. Or we think that, hey, I wanted to do something that's of a V shape so that as the price goes up from $1 to 1.05, I want to have more of my liquidity as the price goes up, right? So, you put it in like a slope or a V shape. And smart contracts here, right? Firstly, we determine what happens when people are swapping between tokens within the bins. And then secondly, how do we organize and find all the different bins for a particular market? So in this case, Arbitrum and USD Circle. And then lastly, the router. When we have lots of pools, how do we, swap and find the best price across different pools?
Got it. Thank you. That was a really clear and concise overview of how that works. Now, I want to move on to speak a bit about your financials. So could you walk me through your economic model, starting from the DEX side of things, so we understand that how value flows to all stakeholders, so supply side participants, and also how user protocol capture value?
Sure. A decentralized exchange like Trader Joe, we are a two-sided marketplace. So what does that mean? When traders swap token X to token Y, they pay a fee to the liquidity provider. So, the liquidity provider, they have liquidity in the bins and so on for the traders to swap. And when the trader swaps from token X to token Y, they also pay a small percentage of fees to the liquidity provider. Different pools can have different fees. And in any case, the trader, we find the best price for the trader for the tokens they want to swap, and then they pay the fee to the liquidity provider. Now, the liquidity provider would then pay another fee to the protocol. So let's say they might earn 25 basis points for a particular swap that the trader made. And of the 25 basis points, they might pay, 5 basis points or 7 basis points, whatever it is, to the protocol. So that's how the business model works. The traders pay the LP, and then the LP pays to the protocol. So this works for us. We do this without having to add any additional like fancy yields, incentives, yield farming, token emission incentives, and so on, simply because Liquidity Book is very efficient. So since launch, we've proven that LPs can be sustainable without needing incentives. I also mentioned earlier about surge pricing. So in times when market is very volatile, which definitely happened on the first day of Arbitrum airdrop, traders might pay an additional let's say 3 or 4 basis points, dynamic fee to the liquidity provider. And so that's the part that we think, helps with sustainability.
Got it. How about JPEGs? Are you currently generating revenue through that NFT marketplace?
Yes, JPEGs is very similar to some of the more household marketplaces. So, just like OpenSea, we charge 2.5% of all sales, of all listed sales. So if someone lists their NFT and they sell it, 2.5% of the proceeds are paid to the marketplace. There might also be, percentage fee paid to creators for royalties as well. And so, yeah, that one's also a basic, percentage of marketplace.
Yeah, got it. And you mentioned there that you have like a very straightforward fee model. You haven't seen the need for token emissions or anything like that. So could you just briefly walk us through what the Joe token's purpose is at the moment in your ecosystem?
The Joe token, we've been very careful to develop governance within our community. We feel like, decentralization and governance is the reason why we're all here. And it's great when it's done right. There are lots of ways in which governance tokens are, I want to say, capitalized or commercialized. But for us, we just like the idea that, folks can, participate in how the exchange can be governed. So for example, folks use the Joe token to vote on governance proposals to open new markets, new pools and markets on the exchange. So, for example, recent proposals have included, opening, let's say like a Stargate. That's a good example. So, folks have proposed, hey, Stargate, they're great. They're on multiple chains. They're on both Avalanche and Arbitrum. They've been, doing some new things. I think that there's a vibrant interest to trade that token on Liquidity Book. Let's open it against, let's say Stargate AVAX market or Stargate USDC. And then folks would then go and vote, right? I think that part is pretty straightforward. It's quite similar to, a lot of other DeFi protocols. The other part is what we call SJO staking or staking Joe. And here, we mentioned that there was a percentage fee of protocol that's paid to the protocol, and that would be paid to SJO stakers. So Joe token holders can stake their tokens into SJO, and we would share the protocol revenues. We would share them as a USD stable. So I think that's a bit different from some other protocols where they might use it to buy back their own token or something. For us, we just give people dollars. It's easier to, less mental arithmetic on what they're getting back.
Got it. So do you share the entirety of protocol fees to SJO stakers?
Yes.
Yes. Okay. And then just in the very beginning, you mentioned that you are a team of builders. Can you briefly walk me through what that team of builders looks like right now? So what's the team size and just general composition?
Sure. So we are a team of roughly 30, including like from engineering to marketing to business development to design to research to community managers. We are 100% remote. So we're spread out across different time zones, whether it's Asia, Europe, US, both East and West Coast. And the tenure of our team members have varied from some have been like day one guys, and some have been fairly new to Trader Joe.
Got it. And then I just have one final question to wrap up this interview. We covered a lot of ground, super insightful context that you've been able to give. But what's next for Trader Joe? Is there anything you can share about your mid to long term roadmap?
So in the short term, we're working furiously hard to launch. First is, we actually have an upgrade for Liquidity Book. It's great, but we're not done. So we're calling it version 2.1. Version 2.1 will reduce gas costs significantly. I think anything between 30 to 40%. It'll also allow for permissionless pools. So today, pools are opened after governance voting. We like the idea that, folks can create pools permissionlessly. And so, we have a feature to enable some form of that. And then auto pools, which I've talked about in the past. Auto pools will make liquidity management for folks that want to participate in Liquidity Book in an automated way. It's much simpler. So short term, 2.1, permissionless pools, auto pools. I should also mention that you asked about staking and the protocol revenue. So today, we're not charging any protocol fee for Liquidity Book today. All supply side fees generated is paid 100% to the suppliers. So all liquidity providers earn all of it today. We've done that to kind of grow our platform, but soon in the future, we will enable fees to be shared to the protocol protocol directly. So, that would also happen after 2.1. In a mid to longer plan, so a lot of it is like we try to keep an open mind about what the new trends are in crypto and DeFi. They move so fast. So we try not to make any like plans that are way too long, because sometimes by the time you've done that, like, the landscape might have shifted significantly. But what we are certain about, like that, things that we want to continue to do, analytics and API. So since we've launched Liquidity Book, there has been an insatiable demand to know more about what's happening. How does it all work? How did I make so much fees? What are all the flows that are happening, and how can we automate or use, for folks to build their own dashboards or trading bots and so on. So analytics and API, I think, is a long-term thing that we want to continuously improve. And the next is automation and tooling. So folks are starting to realize, hey, there's certain successful strategies or patterns, and they want to build their own tools to do it. There are definitely folks that are participating on our platform today that managed to build their own Python bots or something. And I think that's very cool. We definitely want to empower some of the power users to continue to, really explore the edge of DeFi here, right? So we want to improve the tooling to help people do that.
That all sounds good. Can't wait to see how everything plays out. We'll be following your developments closely. Thank you so much, Murloc, for taking the time to give us this insightful overview of Trader Joe. And I hope we can do it again to dive into some of these topics in more detail in a few months' time. Appreciate it. Thanks.
Thank you.